Today we're going to look at Tesla and kind of study its chart over the last 3 years and kind of look at patterns and kind of watch what the patterns tell us about what the stock's going to do. I'm going to start by kind of highlighting 2017. So I'm just going to grab this and kind of highlight that part of the chart. And so if we look at this chart, it's kind of showing us some interesting things. So here, this dotted line here, it's kind of showing us where the stock started. And each one of these bars represents a week in time. And so we talked a little bit about candles before. So remember, the red candle is a down week, a green candle is an up week. And then the wick of the candle shows you how high the stock traded on the top, and on the bottom it shows you how low it traded during that week. And then the solid part of the box shows you where the stock opened and then where the stock closed. So if I focus on this red one, this red bar right here in the middle, this is the week of July 2nd, 2018. So if we look at that chart there, you can kind of see that it started off right around 359. It traded up as high as 364-ish, and then it went as low as 296, and where it closed for the week was right around 308. So that's kind of a big swing for the week. This is so when you see bars that are really long and elongated or really long wicks, those are very volatile weeks. And so here we have a volatile week. Here we have one. So what I want to do is I want to go back and kind of show you the year of 2017. So here we are. Here's the beginning of 2017. You can kind of see we started on 1/1/18. We opened and we kind of started right at the 312 mark. So I'm just reading up here. The open is 312, and then to end the year we ended up on 12/31/18. Our close was 317. So you can see it kind of had it went up a little bit throughout the year, but not much. But during the year, it gave us a lot of volatility. And so volatility is showing the floor and ceiling here, and it kind of gave us a really clean floor. And if we kind of line it up here, you can kind of see we're right around here would be kind of a nice floor level. And so if I kind of draw my line out, that floor kind of came in around 260. And you can see it kind of broke down here in this month a little bit. So the open of the month was below. It traded off a little bit more. It made kind of a lower low, but then if you see in this week, it really rallied back all the way back up. So this was a very volatile week. This was a volatile week. You can kind of see that big movement. Not much happened here, not much happened here. So watch what happens though on the ceiling. And if we really kind of study the ceiling, this year gave us a very kind of clean level of congestion, and you can kind of see. Here's kind of when you look at it from a weekly perspective, here's kind of the ceiling. The ceiling is right around 359. And you can see a few times it kind of broke out above during the week, but then it kind of returned back down to the ceiling. So we call those false breakouts, where it breaks the ceiling very quickly for a very short window of time, and then it comes back below the ceiling. So it doesn't stay north of the ceiling. Same thing when we break the floor. You can kind of see it broke down a little bit quickly, but it kind of came back up to that floor again. So if every time the stock kind of reached this floor and you bought it and you held it, you would have done pretty well if you held it up to the ceiling once it was formed. And you can see right in here we formed kind of a double top. We broke down a little bit, but you can see we kind of came back up to that level again. And so what congestion traders will do is they will buy the floor, sell the ceiling, buy the floor, sell the ceiling, and that's how kind of they make money in those swings. So that's the chart that was in 2017, and now I'm going to go back and jump out to the 3-year weekly chart, and you can kind of see where it kind of breaks out. So this is the breakout moment right here. It looks so small in a 3-year, and the reason why it looks so small is because this company has just gone up dramatically over the last 6 months, and so therefore these big jumps over here that used to look big don't look very big anymore. So if I pull it up, you can kind of see this is a big jump, because right here we're sitting on 253, and for the month we closed at 328, and so that's a nice little percentage move there. And you can even see over here where it starts to kind of go vertical. So let's go back to the 3-year. So here's the 3-year week chart, and you can kind of see that move. So here's the breakout moment. It breaks out, and then what happens is it trades up, and then we see what we call a blow off. It kind of goes up quickly, blows off here, comes back down, and then we kind of see a retracement of that, and it fills the gap, and then once again we get to that ceiling right around 1,000, and then it has its really awesome breakout moment, because here it is at 1,000, and 2 weeks later, this is a week and this is a week, it's up to 1,500. So that's a 50% move in a pretty well-known company in 2 weeks is pretty remarkable. And so then when we watch it, it kind of trades back down. And now all of a sudden it turns into funny money, because it hits that 1,500 mark, and literally 1, 2, 3 weeks later it's up to 22. So this stock has just gone vertical, but as quick as a company does go vertical north, it will also kind of come back down in that direction too. I'm not sure when that will happen, but we will continue to watch it throughout the semester.